Welcome to Mythos AI, your source for Cliff's Notes on complex subjects. Join Anna and Phil for yet another engaging conversation.
Welcome to the deep dive. Today we're looking into the US dollar, its history, how it became so dominant globally, and what's influencing its trajectory right now in May 2025.
We've got a range of sources, thanks to a listener, that really map out the dollar's journey from its very beginnings right up to today.
Yeah, and our mission here is to unpack the key insights from these materials. We want to understand the significant moments in the dollar story, especially given, well, everything happening in the world today.
It's quite a narrative, going from that confusing mix of currencies after the revolution to the world's main reserve currency. To really get where we are now, we have to start way back.
Back at the beginning, period right after the Revolutionary War, financially, things were chaotic.
Chaotic is a good word. A real mess, frankly. You had Spanish coins, coins from Portugal, various states issuing their own money. It made trade incredibly difficult. Building a unified nation required something more stable.
So something had to be done.
Right. And that led to the Coinage Act of 1792. This was more than just minting coins. It was a major statement about national sovereignty.
This is where the US dollar officially became the unit of money.
Exactly. It established the dollar. And crucially, its value was pegged to the Spanish milled dollar, which was already widely used and trusted. That made adoption much smoother, you see.
Smart move. Build on existing trust.
And it put the federal government firmly in control. The act created the U.S. Mint, actually the first federal building under the new Constitution. It also brought in the decimal system, dollars and cents. Pretty innovative globally at the time.
A system we obviously still use today.
Yes, and it specified the coins. Copper cents, silver dimes and dollars, gold eagles.
Yeah.
The designs featured liberty. It was all about creating one unified, federally controlled currency, a real declaration of economic independence.
And behind a lot of this early financial thinking was Alexander Hamilton. He had a clear vision.
He certainly did. As Treasury Secretary, he faced massive war debts. His big idea was for the federal government to assume the state's war debts, consolidate them, pay them off, establish the nation's credit.
But that wasn't universally popular, was it? I mean, states that had paid down their debts.
Exactly. They weren't happy. Why should they pay again, essentially? Plus, there were fears about speculators getting rich off old war bonds. It sparked fierce political debate.
The famous compromise involving the location of the capital, right?
That was a part of the horse trading, yes, to get the debt plan through. Then Hamilton pushed for a national bank, kind of like the Bank of England.
Another controversial idea, I imagine.
Absolutely. Critics worried about concentrating power, helping elites. But there was a deeper constitutional argument, too.
Strict construction versus implied powers. Jefferson versus Hamilton.
That's the one. Jefferson and Madison argued the Constitution didn't explicitly grant power for a bank, so it wasn't allowed. Hamilton argued the power to manage finance implied the need for a bank, the necessary and proper clause.
And Hamilton won that round initially.
He did. The first bank of the U.S. was chartered. But that conflict was really important. It set a precedent for ongoing arguments about federal financial power, central banks, and public distrust that we've seen throughout U.S. history.
Okay, so the early nation navigated those challenges. But the Civil War brought a whole new level of financial crisis.
Existential, really, for the Union. War costs were immense. Gold reserves were shrinking fast. They were looking at bankruptcy.
Which led to the greenbacks?
Yes. The Legal Tender Act of 1862. This allowed the government to print United States notes, greenbacks, the really radical part. They weren't backed by gold or silver. Their value rested purely on government credit and the fact they were declared legal tender. This was the first major federal paper currency since the disastrous Continental notes of the Revolution.
Which must have made people nervous, remembering those worthless Continentals.
Definitely. Huge fears of inflation. Many believed money had to be backed by metal. Foreign observers were pretty skeptical, too.
But they were crucial for the Union war effort.
Absolutely vital. They let the government pay soldiers and suppliers when specie, gold and silver, was scarce. Funded about 15% of the war. Because they were legal tender, people had to accept them, which helped maintain some value, certainly better than Confederate currency, and it helped push towards a national currency system away from state banknotes.
So this was a powerful demonstration of the government's ability to create and manage fiat currency in a crisis, a step away from pure commodity backing.
A major step. It showed the state could decree value. It laid groundwork for, well, modern monetary policy, even though the debate over gold versus fiat would rage on for another century.
Let's jump forward to the early 20th century. The U.S. financial system still lacked a key piece, a central bank, leading to instability.
Yeah, those recurrent banking panics, especially the big one in 1907, made it obvious something was needed. The system needed more flexibility, an elastic currency that could expand and contract, plus better bank oversight.
Under the Federal Reserve in 1913.
Correct. The Federal Reserve Act created the Fed system. Its job was managing money supply, supervising banks, and crucially, acting as a lender of last resort during crises.
Aimed at stabilizing the domestic system. Did that impact the dollar internationally yet?
Indirectly, at first, but by making the U.S. financial system more stable and reliable, it made the dollar itself more attractive internationally. You can't really have a global currency tied to a system prone to constant panics. The Fed laid a necessary foundation.
Then the world wars happened. These seem like massive turning points for the dollar's global role.
Here's the important. World War I started shifting the U.S. from being a debtor to a creditor nation. The Allies borrowed enormous sums from the U.S. More international finance started flowing through dollars.
And World War II accelerated that dramatically.
Decisively, Europe and Asia were devastated. The U.S. economy, meanwhile, boomed as the arsenal of democracy. By 1945, the U.S. produced, over half the world's manufactured goods and held maybe 2/3 of the world's gold. That sheer economic dominance cemented the shift from the British pound to the U.S. dollar as the world's leading currency.
And this new reality was then formalized.
Yes, at Bretton Woods in 1944, 44 nations met to design a post-war monetary order. They created a system of fixed exchange rates, with most currencies pegged to the U.S. dollar.
And the dollar itself was pegged to gold. For foreign governments, anyway.
That's the key part. The U.S. guaranteed convertibility for foreign central banks at $35 an ounce. It made the dollar effectively as good as gold. The IMF and World Bank were also created there.
So Bretton Woods basically wrote U.S. economic leadership into the rules of the global system.
It did, and it conferred that exorbitant privilege, as it's called. Because everyone needed dollars for trade and reserves, the U.S. could finance its spending, even deficits, simply by issuing more dollars, which the world readily absorbed.
But that system eventually came under strain in the late 60s.
Yeah, major strains. The U.S. was running big deficits, Vietnam War, social programs. Meanwhile, Europe and Japan had recovered, were becoming export powerhouses, and started accumulating huge amounts of dollars. They began to wonder if the U.S. actually had enough gold to back all those dollars.
The famous gold drain.
Right. Countries started redeeming dollars for U.S. gold. Reserves fell. Add in rising U.S. inflation, and the pressure became intense. So President Nixon made a move on August 15, 1971.
A Nixon shock, closing the gold window.
He unilaterally suspended the dollar's convertibility into gold for foreign central banks. That basically blew up a central pillar of Bretton Woods. It ushered in the modern era of fiat currencies, where money isn't backed by a commodity and floating exchange rates. From then on, the dollar's value depended purely on faith in the U.S. economy, its institutions, and its power.
So the dollar is now floating, not tied to gold, yet it remained dominant. How did that happen? The petrodollar system seems key.
Absolutely critical. After the 1973 oil shock, the U.S. struck deals, especially with Saudi Arabia and OPEC, to price oil exclusively in U.S. dollars. In return, the U.S. offered security guarantees.
Meaning any country buying oil, which is basically everyone needed dollars first.
Precisely. This created enormous ongoing global demand for dollars, totally separate from gold backing. And oil exporting countries with huge dollar surpluses, these petrodollars, tended to invest them back into U.S. assets, especially treasury bonds.
Helping finance U.S. borrowing.
A very neat circle from the U.S. perspective. It strategically linked the now fiat dollar to the world's most essential commodity.
Beyond oil, the sheer size and strength of the U.S. economy and military also played a role after '71.
Fundamentally, yes. The U.S. had the largest economy and, crucially, the deepest, most liquid financial markets. Holding dollar assets like treasuries was easy, safe, and efficient for global investors and central banks. Plus, U.S. military power projected global stability.
Which reinforced the dollar's safe haven status.
Exactly. In times of global crisis, money tends to flow into dollar assets, partly for economic reasons, but also because the U.S. is seen as the ultimate safe harbor. It creates this loop. Military power supports financial dominance, which helps fund the military power.
And this dominant position allowed the dollar to be used more explicitly as a tool of influence, coercion even.
Increasingly so. Through influence in the IMF and World Bank, the U.S. could promote policies aligned with its own economic philosophy, the Washington Consensus, favoring free markets. This kept many countries integrated into the dollar system,
And then there's the rise of financial sanctions.
leveraging the dollar's central role in global payments. Since so many transactions clear through U.S. banks or use dollars, cutting off access to that system became a potent foreign policy tool, isolating adversaries, influencing behavior through economic pressure. This weaponization of finance became a major feature.
But the 21st century started bringing new challenges into view.
For sure, the euro's launch in 1999 was a big one.
The first real potential competitor on a global scale, backed by a huge economic bloc.
It quickly became the #2 reserve currency. There was talk of major diversification away from the dollar. But the Eurozone had its own issues. No fiscal union, less integrated markets than the U.S. The sovereign debt crisis really exposed those weaknesses. So a challenger, yes, but with limitations.
At the same time, China's economic rise was accelerating after it joined the WTO in 2001.
Transformative. China became the world's factory, a huge exporter, and accumulated the largest foreign exchange reserves ever seen, mostly in dollars. Ironically, this initially strengthened the dollar system because China needed to buy U.S. assets, but its sheer economic weight obviously pointed towards a more multipolar future.
And China began taking steps, albeit cautious ones, to promote its own currency, the renminbi, RMB.
Yeah, things like currency swap agreements to facilitate trade in RMB, offshore clearing hubs. Getting the RMB included in the IMF's special drawing rights, the SDR basket, in 2016 was a symbolic win. But they kept strict capital controls, which limited the RMB's global usability. So it was this interesting dynamic, supporting the dollar system through trade, while slowly building potential alternatives.
Then the 2008 financial crisis hit, originating in the U.S. housing market.
A massive shock to the system. But paradoxically, the initial reaction globally was a flight to quality, into the dollar. Amid the panic, everyone wanted the perceived safety and liquidity of U.S. Treasury bonds.
So the dollar held its ground almost because there was nowhere else big enough to run to.
That's the resilience by default argument. No other market could absorb that tidal wave of scarce capital. But the crisis definitely damaged the U.S. reputation, and the policy response, massive quantitative easing, QE, near zero interest rates for years, raised serious long-term questions about U.S. debt sustainability and future inflation.
Which likely fueled more talk about de-dollarization.
It certainly gave momentum to countries wanting to reduce their vulnerability to U.S. policy and sanctions, or just increase their own economic sovereignty. The BRICS nations, Brazil, Russia, India, China, South Africa, really started pushing this narrative.
What were they actually doing about it?
Promoting trade in their own currencies, setting up bilateral swap lines to bypass the dollar, and creating their own institutions, the New Development Bank, NDB, in 2015, like a BRICS-led World Bank, and the Contingent Reserve Arrangement, CRA, in 2014, a sort of mini IMF for mutual support. Early days, maybe, but clearly signaling intent to build an alternative financial architecture.
And around the same time, 2008, 2009, something completely different appeared. Bitcoin?
Yeah, Bitcoin emerged right out of the ashes of the financial crisis. That first block even referenced a headline about bank bailouts. It was revolutionary. A decentralized digital currency, no government, no central bank, just blockchain technology.
With a fixed supply, unlike fiat currencies.
Exactly. Capped at 21 million coins. A deliberate contrast to central banks' ability to, well, print money.
So it was an ideological challenge as much as a technical one, questioning state control over money.
Absolutely. It tapped into distrust of government and concerns about inflation. Now, its direct impact on the dollar's global role back then was tiny, but it planted the seeds for a whole new asset class and a parallel financial system operating outside traditional government structures.
Okay, let's move into the first Trump administration, 2017-2021. We saw a distinct style, often called transactional dollar diplomacy.
A key feature was the prominent use of trade tariffs on China, obviously, but also allies, justified by claims of unfair practices or national security.
And lots of talk about currency manipulation.
Yes, especially aimed at China, though formal actions were less frequent. But the unpredictability of these tariffs created a lot of uncertainty for global businesses and supply chains, and that uncertainty naturally pushed other countries to think harder about alternatives, ways to insulate themselves from sudden U.S. policy shifts.
There was also a change in the dynamic with the Federal Reserve.
Quite unprecedented. Very public criticism of the Fed and Chair Powell, demands for lower interest rates, constant pressure.
Why is Fed independence considered so vital, especially for the currency's global standing?
Because it ensures monetary policy is driven by economic data and the goal of price stability, not short-term political gain. If global investors perceive the Fed as losing its independence, they might worry about inflation or politically motivated policy swings. That erodes confidence in the dollar as a stable, reliable store of value.
The use of the dollar as an economic weapon also seemed to intensify.
Definitely. The maximum pressure campaign on Iran after pulling out of the nuclear deal was a major example. Broad sanctions on oil, finance.
Including secondary sanctions hitting companies in third countries doing business with Iran.
Right, extending the reach of U.S. financial jurisdiction significantly. The trade conflict with China also had elements of using economic levers for strategic goals. This very overt weaponization really spooked not just adversaries but allies too. It gave a major boost to de-dollarization discussions worldwide. Everyone started thinking, could we be next?
And finally, that first term also saw deregulation efforts and a big rise in the national debt.
Yes, an agenda of cutting regulations, particularly in finance and energy. Coupled with significant tax cuts in 2017 and spending increases, the national debt grew substantially. Then COVID-19 hit and spending exploded.
The debt jumped by nearly $7.8 trillion in those 4 years, reaching highs relative to GDP not seen since World War II.
That kind of debt level increases reliance on foreign buyers for U.S. Treasury bonds. While demand remains strong for now, persistently high debt raises long-term questions about fiscal sustainability, which could eventually factor into perceptions of dollar risk.
Okay, now let's shift to the really current situation, May 2025. There's a truly novel challenge emerging, this intersection of meme coins and politics.
It's a wild development. Meme coins started as these internet culture tokens, value-driven by hype, community vibes, sometimes political affiliation, rather than, traditional fundamentals.
Sort of financial speculation mixed with online identity?
That's a good way to think about it.
Yeah.
They challenge standard ideas of value, and now we're seeing this collide directly with the highest levels of politics.
You're talking about the Trump P token?
Yes. Launched back in January 2025, just before the inauguration. President Trump announced it himself on social media, the only official Trump meme. Its logo even references that assassination attempt story.
And the market reaction was explosive initially.
Reports suggested a market cap hitting $27 billion very quickly. The president's own reported stake was valued at its peak around $20 billion, although ownership seems highly concentrated, maybe 80% with affiliated wallets.
And just this month, May 2025, there was that exclusive dinner for top investors.
Right. Directly linking investment in this speculative token to access, to proximity to the president. This is, it's uncharted territory. Fusing political office, personal branding, and volatile digital finance so publicly.
So the token's value seems tied directly to Trump's popularity and influence, almost like a political fandom stock.
It seems very much driven by engagement with the Trump brand. Events like that dinner cause price surges, suggesting access is part of the perceived value. For holders, it's maybe partly investment, partly political statement, participating financially in the phenomenon.
Which is fundamentally different from how a national currency like the dollar derives its value.
Completely different. The dollar rests on the U.S. government's credit, its economy, its institutions, legal tender laws. This meme coin's value is largely socially constructed by its community, driven by hype, sentiment, and connection to a figurehead. It's like the gamification of political support, challenging the state's traditional role in defining monetary value.
Does this kind of thing pose a challenge to the dollar's symbolic authority?
Well, the dollar historically symbolizes U.S. power, stability, institutional seriousness. Think, in God we trust, the Federal Reserve's image.
And contrasting that with a speculative, hype-driven meme coin tied to a political personality, it's quite a contrast.
It's symbolically jarring.
Right.
When a leader treats something currency-like, even a meme coin, as brand promotion or entertainment, it arguably diminishes the symbolic weight of the actual national currency and the institutions behind it. It blurs lines.
And there were reports linking some holder wallets to other more controversial tokens.
Yes, suggesting connections, at least to investor portfolios, to certain online subcultures that might aim to subvert mainstream trust. So the meme coin could be seen as a kind of symbolic arbitrage, playing off the dollar's established status, maybe subtly eroding its perceived sanctity.
So let's look at the broader picture now, May 2025, under the second Trump term. What's the projection for Fed independence?
The anticipation is for continued, maybe even increased, pressure on the Fed. The administration's likely policy goals, extending tax cuts, deregulation, tariffs, tend to be inflationary, putting them potentially at odds with the Fed's mandate for price stability.
And the administration has ways to exert influence.
Well, there are ongoing legal questions about removing agency heads. More directly, upcoming appointments to the Fed board, including potentially the chair role next year, are opportunities to shape its direction. Right now, in May 2025, the economic data suggests the Fed might want to hold off on easing rates due to inflation, which could create friction. Any sense that the Fed is losing independence really worries international investors and could lead to demands for a higher return on dollar assets, a political risk premium.
And the use of economic tools like tariffs and sanctions, is that expected to continue?
The expectation, based on the first term and early actions this year, is yes, a continued transactional America-first approach, using tariffs, sanctions, market access as bargaining chips, or for punishment. We've already seen executive orders in early 2025 suggesting an active interventionist trade policy, maybe using things like reciprocal tariffs subjectively.
Using economic leverage to ensure alignment with U.S. goals.
That seems to be the pattern, which, again, creates global uncertainty and gives other countries more reason to seek ways to reduce their dependence on the U.S. financial system.
What about the impact of a more isolationist stance on the dollar's reserve status?
If the U.S. emphasizes bilateral deals, seems skeptical of global institutions, imposes broad tariffs that contrast sharply with the historical U.S. role in maintaining an open global system, which actually fostered trust in the dollar. Analysts right now, May 2025, are pointing to U.S. policy uncertainty and this perceived isolationism as factors making the U.S. seem less predictable, less reliable as the system's anchor.
Making holding dollars seem riskier for other countries.
If you're worried about suddenly facing sanctions or tariffs or unpredictable policy shifts, holding vast dollar reserves starts to look less like a safe, neutral choice and more like a political risk. So, ironically, an America-first approach could accelerate diversification away from the dollar, weakening that exorbitant privilege.
Which plays right into the hands of groups like BRICS plus trying to build alternatives.
Absolutely. The momentum among BRICS plus nations for alternatives is likely to pick up speed, partly fueled by these U.S. policies. They've been vocal about wanting a multipolar monetary system. They've set up the NDB, the CRA. As of early 2025, they seem increasingly coordinated in challenging Western institutions and explicitly aiming to reduce the dollar's role.
So things like funding projects in local currencies via the NDB or more bilateral trade bypassing the dollar, those are direct challenges.
They chip away at dollar dominance. U.S. actions perceived as unilateral or unreliable just act as a catalyst, pushing these countries closer together and strengthening their resolve to build their own systems. It pushes towards a more fragmented multi-currency world, maybe with regional blocs.
All of which brings us to the fundamental question, does the dollar still represent trust in the same way?
That really is the core issue now. Historically, trust was built on U.S. economic stability, strong independent institutions like the Fed, deep liquid markets, and America acting as a somewhat predictable steward of the global system. The kinds of policies we're seeing projected pressure on the Fed, transactional sanctions, debt worries, isolationism, they chip away at that traditional foundation.
You mentioned analysts in early 2025 are already seeing policy uncertainty impacting confidence.
Yes, questioning that long-assumed confidence premium on U.S. assets, weaponizing the dollar makes reserves feel unsafe from political whims. And then you layer on the symbolic impact of something like the Trumpto's Memecoin, blurring lines between state finance and speculative branding. It all feeds into a sense that the dollar's traditional pillars of integrity and reliability are being, well, tested.
So perhaps trust in the dollar is splitting.
That seems plausible. There's operational trust. The dollar is still incredibly convenient, liquid. The plumbing of global finance is built around it. That inertia is huge. But strategic trust belief in its long-term stability, its political neutrality, its insulation from domestic policy swings, that seems to be eroding for many global players. And that erosion is what's likely driving the faster evolution towards a more multipolar, multi-currency future.
So it's been quite a journey for the dollar, from a post-revolutionary experiment to the global anchor, but clearly not a straight line, marked by crises, strategic choices, big global shifts.
And now, here in May 2025, it faces this really complex mix of challenges. You've got the rise of external competitors, shifts in global economic weight, domestic policy choices impacting its perceived reliability, and these totally new kinds of disruptions from the digital world intersecting with politics.
It really feels like the core tension now is between the dollar's immense practical utility, it's still the easiest global currency to use, and this potential chipping away at the fundamental trust that historically made it more than just convenient, that gave it its strategic dominance.
That tension is definitely palpable. And it leaves you wondering if the dollar's symbolism is being challenged, if its use is becoming more explicitly transactional, less of a neutral standard. What does that signal about the future of global finance? What does it say about how we even define value with state money alongside these new digital community-driven forms? And maybe most profoundly, what happens when the idea of national identity, so long tied to national currency, gets tangled up with volatile digital phenomena and political branding? It certainly gives us a lot to think about going forward.
Thanks for listening to Mythos AI. Stay tuned for more concise insights. And remember to hit the like button and subscribe for future episodes.